Good morning. Welcome to the morning market briefing. Today is Thursday, July 16th, 2026. We had to cut off our alien discussion a little bit early just then. We have a lot to get to today, including the state of the market, where things are. There's a really pretty significant day yesterday. I don't know if it's just a one-day move or if it's a sign of things to come. As it stands this morning, I think it would be a sign of things to come, which for clients of Narwhal would probably be quite good. It was a fairly good day from a relative performance standpoint yesterday, and we hope that will continue. Tom, just kind of getting engaged with the markets this morning. We see oil hovering in that $77 to $85 range. If you're looking at WTI or Brent, not really changing too much this morning. We continue to get a lot of news backwards and forwards on the Strait of Hormuz and the state of Iranian negotiations, but right now that's not really having a big impact on the markets. The 10-year continues to be in the upper 4.5s, which seems like a good value here. As buyers just aren't really coming to the market. There is a lot of supply out there, and I think that may be weighing on things and just meaning that it's difficult to get a big bid coming into the market on those bonds.
Yeah, I think there's just almost too much availability in fixed income right now. And I mean, the thing that's getting the most traction are tax-free munis, the things that are getting the least traction, private credit, and sort of the spectrum kind of goes in between. And so, I mean, corporates are probably too expensive on the whole. High yield is decent, but not great. But at least you're only holding them for a short period of time. Mortgages continue to just get murdered, which is, I mean, it's an all-time opportunity, particularly if you're buying sub 6% mortgages, to get really nice yields for a very long time and get, that amortization factor. Treasuries are just, I mean, bonds, people don't like bonds. And it's been tough because, I mean, we basically have gone sideways in bonds for, call it almost 4 years now, really going back to sort of the tail end of 21. And so I think there's not a lot of love there, but I think that as that continues to go, the potential for upside is just massive. You're just building and building and building the opportunity, I think.
And the size of the bond market is massive, but relative to some of these shadow supply moves that we've seen, we've had a really big year so far this year in muni issuance, for example. Mortgages haven't really been that much on offer, but we are seeing other areas of significant supply on the credit side, whether that's private credit. And again, none of these are even close to the size of the traditional bond market or the treasuries, but they do have a role. But then even if we're looking at these levered ETFs and options trades, when you structure an option trade or a levered ETF, the other side of it, or even if you just have a PAL on your account, a pledged asset line, this is a company, a bank, for example, Schwab or State Street, that would otherwise be investing that cash in fixed income, but instead they're lending it to you to have a levered ETF or to have a pledged asset line on your account or creating a hedge transaction for an options trade. And so when you have more trading of those instruments, you're going to have more credit supply out there because there's more leverage in the market. And then you're going to have less marginal money to actually go ahead and buy treasuries. So I think that's playing a role too at the margin.
Yeah, and I think that, I mean, we've seen the wage data too. People aren't making more money. Inflation is coming down, but it's still so elevated. I mean, we've seen such huge moves on everything, and wages have not caught up to that. We saw a surge in wages ahead of that inflation, and you could argue a piece of that inflation was driven by that. And you're seeing, we had the cut and checks administration of Biden, where people were getting money in the mail and they had that money, but they didn't save it, and that's gone, and that drove prices up even more. And you're seeing a lot of that turned off. I mean, you're also seeing the people who showed up started getting checks. They're going home and they're not using those checks anymore, and that causes a lot of I mean, this is such a disjointed market, and I think that people are still trying to wrap their minds around what does the next 6 months or 12 months look like. And then the war in Iran obviously is just one more wrench thrown in the gears. And so I think that despite the fact the market is up, and you can say that basically the bond market is flat for the year, there's so much anxiety. It feels like there's just an enormous amount of anxiety hanging over this market. And then you've got everyone who was feeling good last month because they bought chip stocks is suddenly waking up and, the Coke hangover is there. There's no dopamine left in your system and you're just feeling sad all day.
You're exactly right. I mean, South Korea today is actually banning listings of single stock leveraged ETFs because it's causing so much volatility in that market. I mean, we're talking limit up, limit down almost on a daily basis. It'll probably be limit down tonight if the moves in semiconductor stocks hold today. We'll talk a little bit more about that in a minute. But then we talked about this yesterday. Lucid, the electric vehicle company, that there was this rumor that they were going to go Chapter 11 bankruptcy, which was completely false. But because of that, the stock dropped like 50%. The net asset value of the Lucid 2x leveraged ETF, which why you need to double the return of a stock that trades at $7 or $6 or $5 a share is remarkable to me. You're already playing with fire. And their net asset value didn't go to zero. It went negative, which means they were effectively bankrupt. You get nothing if you're the ETF holder. I guess technically, perhaps, can they go after you as an ETF holder and say you actually have to pay more money? Not only did you lose all your money, but you need to pay more money?
It's certainly possible. I mean, anytime you buy one of those, there's a million disclosures that pop up. Like, you've done it, I've done it, off and on. Usually it's for a trade. And as soon as you hit, purchase, even if it's like, what is it, SQQQ or SPXL? Yeah, like some of those, like even the ones that are the major indices, it's like, this is a levered ETF. And then here's 2 pages of disclosures. And I'll tell you, I've never read them. Certainly not to completion.
Yeah.
So it's possible they could be like, you can invest $100 and you might end up owing us 103.
It's remarkable, and it's very scary, and I don't think people know exactly what they're doing.
I mean, they've already notably launched ones for SpaceX, pun intended. I mean, within the first 3 or 4 days, they already had levered ETFs, 2, 3, 4x.
I mean, I think they had levered ETFs before they had options on the stock.
Yeah, I mean, don't do it.
Speaking of launching SpaceX is expected to launch its Starship tonight at 6:45 p.m. Eastern time, 5:45 p.m. local time. The last time they did it, they did get Starship up, but the rocket did not come down well, and so it just crashed. This is going to be critical for the valuation of the company. That's hovering right around the IPO price right now. So a lot of people are working on that. They do have a bunch of contracts to land astronauts on the moon as soon as 2028. But in order to do that, they need to have 12 or more times in a row of successful missions getting Starship into the sky, into space. They need to ensure the vehicle is safe to hold humans, and they need to be able to refuel the vehicle in space. So the first step of doing that is actually getting Starship to space, and that's what they're going to try to do tonight. I think they're going to be successful.
Yeah, I mean,
there is no other option. It's like there are some times in life where there is no plan B because plan A has to work, and if plan A does not work, the alternative is disaster.
Yeah, there's I can't remember which Malcolm Gladwell book, but he talks about how the thing about space travel is that there's an acceptable level of risk. In order to be doing this, you sort of have to assume that there's a possibility that the O-ring is going to blow out and one of your, the Challenger is going to blow up halfway between here and the atmosphere. And that's what makes this company so strange, is that, like, we've not really had a publicly traded space company that's really taking things to space. And there's going to be a lot of volatility around that. I mean, it's such a, it's such a volatile operation. I mean, you're literally strapping people to an explosive and shooting them out into a place where they can't breathe if something goes wrong.
Virgin Galactic tried to do it, and then I think they blew up, and they said, okay, we're not going to shoot anything for the next 2 years.
Yeah. I mean, so it's a high risk, high reward. I mean, the reason I I'm honestly, I never really was sure that they would go public because of that volatility, where you're trying to accomplish goals that are so lofty that maybe it shouldn't be publicly traded. It should always be a private company, because I mean, there's just too many. I mean, you got to report earnings on something that's extremely volatile like that. It could go crazy,
especially when you can raise capital in private markets so easily.
Yeah. And so it's interesting. I don't know what the future holds for SpaceX stock. I mean, Raymond James notably put out an $800 price target on it last week, which is something, and that would be crazy, because at that point it'd be what, like $10 trillion, which would be double the size of Nvidia. So I don't know. It's going to be interesting. The lockup really comes off the board in another 6 weeks is when you get the first tranche of the lockup waterfall. What's that going to look like? Are people going to be buying or selling? Again, there's more liquidity in the market. There's going to be more stuff to buy, and that's going to have an effect, adverse or positive, I don't know, but there's going to be, suddenly hundreds of billions of dollars of extra SpaceX shares trading around. What does that look like? We'll see.
If the market certainly opens the way it's indicated today, with momentum stocks declining again, I think that we'll see more support for the portfolios that we've constructed, which is good. But we do want to continue to follow these momentum stories, because they can guide the market. They can be a little bit of a rudder for the market. So we want to be mindful of that. We did get the Beige Book on an economics standpoint yesterday. The Beige Book is what the Fed puts out. I think it's every 6 weeks. It gives a little bit of an assessment of where they think things are. We did have, a little bit of an improvement in the overall economic activity, a little bit of a decline in inflation relative to where it was in May, but really nothing to write home about. And I don't think Kevin Warsh is going to be making any decisions based on a Beige Book that's so backward looking. He's very much focused on these task forces, and we should get, and he did give a little bit more color as to when we should get color on what data he's going to be using and how he's going to be doing communication. We should find that out preliminarily in September, but then kind of a 6-month deadline in terms of how all that information gets adopted. Anything else from Kevin Warsh yesterday, Tom? He was in front of the Senate Banking Committee, so he went back and forth with Elizabeth Warren on unrelated issues. But anything of consequence that you saw there?
No, I think it was more of the same. I will say, if you want to watch something that's just so hard to sit through, the Elizabeth Warren interaction was nuts. And I will give her credit. She is a master of framing things in a way that makes whatever she's asking seem like she is a white knight fighting against injustice, but is intentionally misleading.
I mean, after listening to her, I was actually convinced that someone random gave Kevin Warsh $100 million bonus like the week before he took the job at the Fed.
Yeah, so she started out being like, you had to divest all of your private investments prior to coming to the Fed. You had to sell all the stocks and everything you owned in order to do that, and you committed to that. And he's like, yeah, I did that. And she's like, all right, well, which of the billionaires cut you a check for all that money? Which is not how it works. I mean, we manage money, and if a client called me and was like, hey, I need to liquidate all my assets, turn them to cash because I took a government job and I can't hold any of the things, I'm not cutting them a check. That's their money. But she was framing it like he had been compensated by an unnamed nefarious billionaire to become the Federal Reserve chairman, and that he was now beholden to them because they had cut him that check. And then she went on to go after Mickey Bowman, who I guess had spoken at some sort of investor conference, but kept referring to it as a secret meeting where she was giving away private details of the inner workings of the Fed so that all of those investors could then go make money and perform insider trading of various levels of evil. And it was that was the entire interaction, those two talking points, and it was insane. It was one of the craziest interactions I've seen in one of these. And credit to Kevin Warsh, he just stood there and took it. But man, she was as shrill as she's ever been, and her talking points were as tilted and as unusual as they've ever been. It was really something to watch.
Yeah, interestingly, she definitely brought up Stan Druckenmiller, who has actually been vocally against Trump uh, on occasion, but who Kevin Walsh did work with previously. She did not bring up George Soros as a potential billionaire who bought the money.
Yeah, exactly. Yeah.
The On the momentum side on stocks, it's all kind of being governed right now by Taiwan Semiconductor, which reported overnight. Taiwan Semiconductor down 5%. The revenue numbers were extraordinary. They now expect growth of over 40% this year, which basically means they're going to exit Q4 above 40% growth. They're spending more on capital expenditures. They now expect about $64 billion. They previously expected $56 billion. So an uptick there in CapEx, and that's why the stock's down. People don't like them spending more money, even though for Taiwan Semi, when they spend more money, it's because they can produce more chips, and that should be a good thing. But Taiwan Semi's down 5%, and really it's taken all of the semiconductors down with it. But this is a case of the market shooting first and asking questions later, because yes, if Taiwan Semiconductor produces more chips and spends more on CapEx, that is going to lower returns for the chip manufacturing community. Think Intel, companies like that. It's probably going to increase supply of memory chips, so that's not good for things like Micron. But it's also an indication of demand for AI compute. So that's good for NVIDIA. It's going to increase demand for the materials that are used in chip production. So that's good for Integris. That stock's down pre-market. And it's obviously going to improve the outlook for companies that supply that equipment that's going into that factories that's going to be directly spent. That $64 billion is going to be directly spent on. And yet all the semiconductor stocks are down. And I think this just speaks to the momentum factor in the market. People aren't trading individual stocks. What they are trading is these factor exposures, these small sectors, call them mini sectors, subsectors of the market, and they trade it all together as a basket based on one company's one piece of news. So there's very little discernment, which I think actually creates opportunity, but sometimes there's noise associated with that. So all semiconductor stocks pretty much this morning are down. And we're seeing the same thing in aerospace. United Airlines cutting capacity in the fourth quarter. General Electric seeing slower orders growth, and so all of those are down as well, which had previously been performing quite well. So momentum really taking it on the chin this morning.
Yeah, it's interesting. The basket thing is interesting because last week, we talked 20 times about the Anthropic basket, which was the fastest growing piece of the market last month. The Anthropic basket, I'd love to see the stats on for the first 15 days of this quarter. My guess would be down 20% would be base case for the low end.
Mm-hmm.
Everything is getting crushed, and it's having an effect on the market, but not if you're someone who doesn't hold those things. And so it's been a tale of two months really for if you're a normal diversified portfolio manager who's got things like Johnson & Johnson and GM or Walmart or some of these boring companies, you're probably wildly outperforming someone who's trading the Anthropic basket actively.
June was terrible.
But yeah,
July
June you were
was
down
great.
High or probably mid double digits to the Anthropic basket performance wise, but now you're probably doing just fine. So that's sort of you can't be so reactionary where it's like, man, I've got to chase these things because otherwise I'm dead in the water. But if you really sit that back and look at it, it's obviously a bubble. It's a supply chain squeeze. It's no different than trading on oil in March once the war kicked off. Sure, owning ExxonMobil was awesome, but now oil's at $70, and if you bought it at the highs, you're down now. And so there's things like that where you've got to be careful. Is it signal? Is it noise? Is it a short term transitory move, or is it these are long term companies we need to be buying? It's very different from 3-4 years ago when NVIDIA was up 20% on earnings and we don't own enough. In fact, we need to quadruple our size on a day that the stock is up 20%.
Yeah, there's definitely tenses I think are important in investing. The past present is not a synonym for the present. It's good to have owned even while it may not be good to buy.
Correct.
And then, because meanwhile, you have some of the stocks. JB Hunt this morning is the highlight. It's up 8%. They're seeing significant growth across their business. The trucking capacity is just becoming really tight. And on top of that, they're seeing a continued drumbeat of improving demand. Not rapid, not accelerating, not super fast, but on top of the capacity reductions that have been made in the industry, they're seeing really good growth on pricing. But really what stood out to me was the volume piece, especially on the East Coast. A lot of capacity is moving from road to rail. And that's good for JB Hunt because there simply aren't enough truck drivers, number one. The trucks that are driving are very expensive. You got fuel costs, which isn't working for you. And the rails have actually done a pretty good job getting to they call it trip plan compliance, getting their products delivered on time, which historically they haven't done, especially in periods of significantly rising volume. But they're able to absorb 10% volume increase. They did get some pricing as well. So JB Hunt looking up 8% pre-market, and that's going to have a good knock-on effect for the rest of the trucking companies this morning. Also in healthcare, United Health up 5%, just like Elevance, the Blue Cross Blue Shield operator yesterday. Much lower medical costs than expected, came in at 86.7 versus 88.4, which is a huge delta when you're looking at the health insurance companies. I continue to think, and they're going to say this is because they're just managing costs a lot better. I think this is Maha. And you're seeing it at Abbott, which is seeing some decelerated growth. They're up, but it's just very low expectations there. But I think that people are becoming healthier, and I think that they're kind of doing it on their own backs. I think that people are buying retatrutide. I think they're buying tirzepatide, Ozempic, all on the gray market. Some of them are buying it direct from the provider. But I think this is resulting in much healthier population much faster than people expected. And I think that's benefiting the payers who are pricing for much sicker people.
We've also got something that's floated around the office, and you probably know more about it than I did, but young TK is talking about we need to invest in there's an Irish company, which is the premier purveyor of whey protein, because the protein market is about to become the next wave. Yeah. And he could tell us more about it when we'll have him on the call next time. We'll make sure and ask him. But apparently there's some Irish company that they're just milking the absolute bejesus out of cows and drying that up and putting it in bottles. So we got to figure out, is that actually a thing? So, but I think that's a big piece of it as well.
I agree.
I think there's also a certain portion of, I think as you look at the aging of the population, one, we had a mass culling of old people during COVID. Maybe that's the warmest way of saying that, but that's true. Then you've got the people who are in my generation who have spent their entire childhood eating processed foods. My kids eat food that I didn't go near until I was in my 30s. Avocados, blueberries. These are things that weren't in my home as a child. Spinach. Like by the time I got to high school, we had graduated from iceberg to romaine, which now is, people consider that a trash lettuce now. But that's just the way of the world. And now you've got all these young people who aren't interested in Pop-Tarts. And I think that that's actually a natural progression of the Maha movement. So you've got people who were unhealthy because they were fed terrible food all through the 90s in their childhood who are now changing that. Their children are changing that. And I feel like there's almost like a demographic shift that's happening as boomers and very old people who are maybe pre-boomer are moving out. You're seeing a move away from the processed food just as a function of cultural taste. So I think it's interesting. You combine that with the peptides and all these things. I think we're headed for a day where it's possible we could maybe curtail some of this healthcare spending.
Yeah, I agree with you. Speaking of healthcare, Eli Lilly is acquiring a psychedelic medicine business called Itai Beckley.
Psychedelics, man.
Yeah, apparently it used to be a kind of this fringe medicine, and now it's going more mainstream. They have and I didn't realize how this actually works. So basically, you take a nasal spray, and you kind of have the psychedelic impact for about an hour or two, and then for the next 3 or 4 weeks, you feel less depressed.
I think it's an interesting space. I've listened to a number of podcasts on things like psilocybin, ibogaine. I know there's a big movement in Texas led by Rick Perry to legalize experimentation with ibogaine because it's apparently a very powerful dissociative psychedelic, but it's had unbelievable effects on people with addictions and PTSD, where you basically, they hook you up to a hospital bed and get you feeling good, and then they inject you with ibogaine, and you dissociate and have wild out of body experiences for 8 to 12 hours, and you come out and you're just no longer interested in drinking alcohol or doing heroin, which is, it's something.
I mean, that would be it's a potential for incredible benefit. I am not a doctor. I'm not a scientist. I am a human, and I am petrified of, messing with my brain.
Yeah. I mean, there's a plenty of evidence that if you are susceptible to things like schizophrenia or psychotic breaks, that overdosing on psychedelics can lead you down the wrong path. I mean, there's plenty of evidence of that, but there seems to be, I don't know. I've listened to a lot of it. I've thought a lot about it, but there's a lot of, end of life benefits to things like psilocybin apparently makes you feel more one with the universe. It makes end of life situations more tolerable. There's all kinds of different things, but the problem is, none of these things have been studied because they've been so prohibited since, basically the Nixon administration. So
yeah,
there could be potential benefits there. Who knows? They are all naturally occurring chemicals for the most part. So,
indeed,
could be better than some of the things we've injected ourselves with in the last 5 years, if you ask me.
I mean, certainly Eli Lilly thinks so. I mean, it's spending $4 billion on this company. So, and I actually have a lot of respect for that team there and what they're doing. So, perhaps more than at least one other company.
Yeah,
in the pharmaceutical space.
I don't know if there's an ibogaine one, but you should. There's a very weird series that I'm not sure. Maybe it was Discovery Channel called Hamilton's Pharmacopoeia, where this guy Hamilton goes around, and I think he's the son of like Errol Flynn or like some famous actor, but he's just like an all-time noodly dork guy, and he basically goes all over the world and takes wildly prohibited drugs. Like there's one episode where he does frog venom, just completely leaves his body. There's one where he smokes Quaaludes out of a broken bottle in South Africa, like in a favela situation. It's a very strange show, but it is pretty interesting because it's like, these are the wild drugs that people do all over the world, and I'm just going to go there and take them. It's like Anthony Bourdain, but like a much dorkier dude who's mostly just doing drugs on camera. But anyway, if that's something you're interested in, I think they're all on YouTube now because I don't think it's on Hulu or it's not a streaming kind of show anymore. So
might do some
research,
channel check, some research. Yeah. Uber is also, so Lilly's doing that for $4 billion. Uber is buying Delivery Hero, which is a German company, meal delivery service, for $15 billion, roughly 10% of Uber's market cap. Uber already owned 25% of the company. It's going to allow them to expand further in Asia, Latin America, and the Middle East. I think we're seeing a wave of consolidation in this space, which I think is appropriate. I've always thought that you almost just want one master platform that sits on top of all these guys and just picks the lowest cost one. And I think we'll see consolidation there. The question is are they going to operate them as two brands or a single brand? Because we saw when the rental car space all consolidated, they still operate their separate brands, and there's still a terrible business because it's incredibly competitive. So will Uber and Delivery Hero kind of combine that? Will DoorDash and Deliveroo combine that? Will Prosus and Just Eat Takeaway combine those businesses? We're seeing that consolidation. I guess we'll see what happens, but I think that this makes sense. $15 billion is a big check to write.
I mean, where's Elizabeth Warren on this?
Yeah.
She hates merging companies. She hates monopolies. So we should hear from her shortly because lest we forget, we won't allow airline companies to merge and then they just go bankrupt. So bad for the consumer.
All right. With that, have a great day, everyone. We will see you tomorrow.